But we're below the previous week low, obviously. 3-day look back suggests that we are possibly bullish. For today, we took our previous day low, looking for a return maybe back into premium. The 15-minute chart is what I'm looking at. London high, we're expected to possibly return back into this range, either as a retracement leg or to expand past it. I'm preferably looking for bullish price action today. So if we can get some SMTs at the lows, etc., then I would favor kind of a run back up. Now we do have 10 a.m. news, so I'm opting out of taking anything today. I'm going to hold myself to that. But yeah, I'm looking for that timed low. So 10 o'clock, 9:30 to 10 o'clock from that low. Then we can expand up into 10:30 to 11. I don't like the fact that we're leaving these relative lows. We want 9:30 to drop into this daily imbalance. Now notice how the 5-minute order flow is bearish. So if we were to be bullish, in this case there's your daily BISI tagged, we would need to see a full closure above the 925 order block. So really a full closure above here at the news point or before the news point is the only, in my eyes, valid way to look for an expansion up into the daily, not the daily buy side, but the buy side at London. So in my mind, there's a couple things. I only like bullish price action on a day like today. That's what I'm favoring. I told you that in daily bias. That was my analysis. If we get bearish price action, I'm gonna just turn off the charts because we shouldn't, in this case, at least in my eyes, be having a continuation day on a Tuesday. I prefer if it creates the end of the range, that earlier section. And since we've been displacing on Monday, potentially low of week on Tuesday, we didn't get up into OTE of London. We're kind of even more extra weak. We have SMT on both sides of the market. DXY is not in correlation. So in this case, if the news drops, this may continue down. I'm really not going to even look for anything. I'm not going to tape read it anymore. Now, if we do continue to expand up, I said watch mean threshold of this order block first. I'll screenshot this quickly. I haven't sent anything out. This imbalance too. I'm going to change this color. I don't like this. There we go. 950 taps in the imbalance. So to be honest, the two things I'm looking for on the 5 minutes, either an inversion gap or a change in state of delivery. Change in state of delivery is like the optimal one. For value gap near reversal is also valid because then it implies that we'll get everything else. And we're starting to get some displacement too. And if this 5-minute candle closes above mean threshold, nice acceleration all the way up through. So look at this as a breaker now. So we have this is a valid fair value gap. Doesn't need to reach into discount anymore. So this should be your timed low now. I don't want to see that ran out. We can be looking for the new high in the time window as expected. Now, I still think we're going to get some kind of a speed bump use here. These inefficiencies, I would find it hard to believe that we're going to invert all of these without any retrace. Since we have the breaker here, that's why I said it's likely we're not going to return back into discount. But we have a tiny low probability order block here that helps create the fair value gap. So if we could return back into the wick, that would be reasonable. I don't think it's going to return to the candle body, but the wick on a low probability order block is normally the most sensitive area. For the most part, you're going to be using wicks on low probability order blocks and then just the candle bodies on the high probability order blocks. So 9:59 here. We got news in 1 minute. So I would prefer if we reached into this gap one last time, tap the order block, and then go. Scenario where I could be wrong and it still kind of plays out. Even inefficiency here too. But candle bodies are holding the bullish end of the breaker. We also have a 5-minute gap there. Now this is where you could start looking at the left side of the curve and mark out low-hanging fruit or inefficiencies that could be used as a speed bump. So we have this higher time frame gap on the 15. Obviously all the lower time frame gaps on the way up too. Hourly, not a whole lot of stuff, maybe the hourly order block, but those are the things you could be looking for. So once you've confirmed the smart money reversal has happened, and maybe you're either in a position or you're tape reading it, don't just get stuck at looking at this side. Look at both areas because it's going to refer back into this area to what it's going to do on the right side. When is it going to retrace? Well, there's a fair value gap in premium, it's going to retrace down. Or is there a short-term high? Is there an order block or a mitigation block on the left side of the chart that we could be using to hold price up? All those things you should be looking at. So don't just get caught up. A lot of times in the beginning, you'll get caught up looking at this side, when in reality, the left side of the chart has more information all the time than the right side. So you could be using inversion order blocks, which is technically mitigation. All those things are super important. So like here, once we get a closure above this buy side pool, this is, I think, a mitigation in this range. Breaker would be at the bottom, and that should be holding price up. Now, I would expect that this buy side pool up here is traded into. This one is like, not full TP, but expected buy side. I don't think we're going to run this and move lower. May get a retracement off of it, but this is the expected buy side. That'd be your London high. And the reason being, ES failed to run out their high. Your relative equal lows. Sorry, relative equal highs here and a short-term high there. Candle body's closing the bullish end. So look at that speed bump being used as a short-term retracement into a discount. And now we should see a closure. Now, this order blocks that create or fill fair value gaps are going to be high quality. Or are something like a breaker where we're stop running. So order blocks only have meaning when they're paired with other tools. CISD, for example, normally is paired with a stop run and then a closure past. Then you can touch back into it. And normally it's high quality when you have a fair value gap next to it. Same thing in here. So if we were to, for example, close now through this gap, since this inefficiency is trading through it's actually traded into the 5-minute SIBI, and we've now printed on top of it and we displace above, that would be a really, really high quality order block, especially if we have a gap here. Like another fair value gap printed on top. I would want to see mean threshold of that hold. We just touch into it and fly off. And if you think about it on a lower time frame, this 1-minute candle, every order block, if you think about it, is technically a fractal market maker buy model or sell model on a lower time frame. So if you have something like a 15-minute order block, then normally there's going to be a 1-minute market maker model in that range. So if there's a market maker model that's completed within this 1-minute candle, for example, as price is displacing through that range, this is technically all balanced, at least in my mind. And we should have supporting factors like mitigation blocks, breaker blocks, all these PD arrays on this side of the curve that should be holding price up, right? So if we were to drop back into this, you would expect that most of those PD arrays on the right side of the curve, once we displace through, is now going to be holding price up. And that's like a fractal market maker buy model now, right? In which we're tracing into a short-term discount and then trading back up. So you got to think of those order blocks. What's going to be the highest probability ones? Well, the ones that are the cleanest, have the thickest candles, and are in some way completing a market maker model. So I'm going to look at this order block. Although it's not really high quality since we don't have an inefficiency next to it, that would be the one that I'd be pulling. And you can go back and look at like that 5-minute gap I had marked out originally. This gap here. Look how we have a thick candle body up already through it. And now it's when it's traded through. This technically is a breaker, but we're trading into that down closing candle as well. So both of these candles in some sense have some purpose in holding price up to. So now what time is this at? 10:12. So it's still the wrong time to put in the high. Mark out 10:30 here. If you want to, but just kind of tape reading and having some sort of journal intraday and outside of the day is going to be really important to improving. So nice expansion up. There's your buy side hit. We're still 6 minutes ahead of schedule. So look for further expansion, but let me screenshot this really quickly. Don't you love this stuff? Never gets old. So look at the 5-minute imbalance being used as a speed bump in price. Trades up a little bit, drops into the inefficiency, turtle soup, and then expansion. Now, a swing high is a premium PD array. You could look for a potential retracement back into a short-term discount, but also look at the candle closure relative to that buy side. If we close our candles all the way up here, that to me looks like we're going to continue to expand up. If, for example, we're just wicking it and closing all the way back down, wicking it, closing all the way back down, then you look for a deeper retracement potentially. This kind of closure, that's a pretty normal closure. I would assume I can't really infer anything from this kind of candle body closure next to the buy side there. But every swing high, every order block, every fair value gap in premium, if you're looking for a market maker buy model, is going to be a speed bump. And depending on the closure relative to the gap or high or whatever, you can then infer, are we going to see a retracement, a deep retracement, or just continued expansion? Potentially even a reversal if the time and price is lined up. Like I said here, that's the wrong time for a swing high to be put in. So I know it's going to continue to expand and reach that buy side. Now we have an inefficiency here, and we have a short-term dealing range, a sell side sweep to the most recent buy side. So this is now our child dealing range we can refer back to. If price wants to drop into a discount, that's what I'm going to be looking for. So yeah, if you take time off, especially in the beginning, it's really, really beneficial. And I also don't think, like, if you're trying to make this your job, you also should not be looking at it for 8 hours a day. Like, that's not realistic either. Like, look at it maybe in the morning, 4 hours, whatever, journal, do whatever you need to do. And then don't look at it. Like, you don't got to be schizophrenic 24/7 about these charts. I think in the beginning it's good, but after you kind of know what you're doing, at least if you have a model, just focus on doing quality work over the quantity. Deep work every day instead of just kind of monotonous kind of doing whatever. And there's your expected buy side right at, what time is it now? What time is it? That's got to be random, right? You got to love this stuff though, huh? Let's go. This is like literally a perfect day. So like there's a slight part of me that's like, damn, I wish I would have traded today, because what is that? Like 117 points. So there's still a little part of me. I'm not saying I'm completely a robot. There's like still a little part of me. I'm like, you know, I could have gotten in and taken the whole another week's worth of setups, but that kind of emotion will always be there. And to be honest, I'm more happy that I got the experience of just watching this happen and boosting my confidence that this stuff happens every day even more than you know, trying to freak out over a trade. And exactly, there's always going to be another setup, and normally it's going to be a better setup because you already have the experience of the previous weeks, whatever. How do you personally frame continuation trades with conviction? Time is going to be important. So like this kind of entry, dipping into this gap at 1014, we're expected a new high, and we have not reached premium. So this kind of continuation entry is going to be high quality in my eyes. Also, we should be holding the PD raise. So if we're holding the bullish order blocks and the gap like this, and it's in the wrong time, we're dipping into this at 1017. The high there is 1012. We haven't reached premium. High quality continuation entry. Okay, so it's both time-based and price-based. May or may not stream tomorrow, depending on price action. Take care, get outside, journal. Do the things that are necessary to succeed in this. And I will talk to you guys soon. Peace.